How does income tax actually affect your cash flow statement? If you're asking that question, you need to tune in right now. How does income tax affect your cash flow statement, right? How does it affect what's coming in and going out? Obviously, more taxes, bad on cash flow statement. But I want to go deeper into first and foremost is how that cash flow statement work, and then two, is there a way to minimize it so you can get a better, healthier cash flow in your life? And that gives you more freedom. Let's dive in. All right, so how does the income tax affect your cash flow statement? First off, what's the cash flow statement, right? Cash flow statement is your income and expenses. That's really what it is, simply. Now, if you're a business owner, this might be why you're asking this, because most normal people don't say my cash flow statement. But there might be some of you guys are nerds like myself that might do it on your personal finances, right? But you're probably doing this on your business finances. And yes, taxes are a part of that. And now I'm thinking about it, I might even give you a few extra bonuses if we've got time here on some tax strategies that might help you out there. But that being said, really like the cash flow statement is really the difference between your income and expenses. The difference between income and expenses is your health. It's cash flow. Think about it like this. Everything that flows creates life, right? When water flows, you create life. When it's stagnant, you get death, like the Dead Sea, like the Great Salt Lake near where I live. That is a bunch of crap, not beautiful at all. Stagnant, doesn't move, it's there. Versus like the Nile, you got freaking rainforest growing around it, right? Same thing with blood flow. What happens when blood flow stops? You die, right? That's it. Cash flow is the same thing. When you have money flow, cash flow come through, you create life. Life in your business, life in your personal finances, in everything. That's where real freedom comes from. And yes, income taxes suck. They're a part of that as well. Here's the thing. Can you completely avoid income taxes? Possibly yes. But I'll tell people this. When people ask me like, Chris, what would you rather pay? $1 million of tax or $2 million of tax? Every freaking time, I say $2 million of tax. Why? Because the thing is this, that some people live in fear of making more money, right? They think, well, if I make more money, I pay more in tax. That's true, but remember, it's not 100%. Say if I pay $2 million in tax, it's probably because I made at least, if that extra $1 million of tax means I probably made at least $5 to $10 million more than what that tax bill was. So I'm making more money anyways. Who gives a crap, right? But again, people are so scared of taxes. Big tip right here, don't let the tax tail wag the dog, right? Don't just do things to save on taxes. Now, I'm a big fan of finding good, legitimate legal ways to write off taxes and take advantage of the tax code. Having good CPAs is important. Here's a bonus tip for you. You want to make sure you have an active accountant working with you. An active one, not a passive one. Not one that you just send your numbers to and they say, well, here's your tax bill, thanks. No, you want an active accountant that says during the year prior saying, here's what you need to do to reduce your taxes. Start doing this right now so that when you get to next year, you don't have to say, oh crap, I wasn't expecting that tax bill. Now let's scrounge together that money to be able to pay it, right? This is true with business and it's true with personal. Now, if you're a business owner, if you have LLCs, if you have an S corporation, you already know the taxes passed down to you personally. Now, if you're asking this question about your cash flow statement, you probably have a C corporation or something like that. But here's the thing I want to ask you is like, why you ask the question about how income taxes impact your cash flow statement? Naturally, it does. Anything that's an expense comes out of your cash flow statement because it's income and expenses. Income's up here, yay. Expenses down here, yay. When it's reverse, expenses up here, income down here, boo, right? Profit, loss, yay, boo, right? Simple definition here. I know you're hoping for a nerdy accountant to tell you, here's how it looks. But the truth is, you want as much income as possible versus the expenses you pay without having to live on rice and beans, without having to be a cheap son of a gun. You want to make sure you have that profit. And this is true even in personal financial situation. You want as much money left over as possible because that extra money becomes an asset for you. It becomes something that could create more freedom for you to help generate more income to keep making that income grow versus your expenses. And here's the truth, guys. Your expenses are going to rise over time anyways. Why? Because there's the thing called inflation. If you haven't been alive for the last 5 years, you already know what I'm talking about, right? You know that inflation is going to go up. You could try to be as cheap as you can. You could try to reduce costs. And you might reduce costs in some ways, but other costs are going to go up. So you got to focus on how do I create more income to do this. This is okay, even if you have taxes. It's okay to make more money, even if it means a bigger tax bill, as long as you have more money and especially more profit. True at home, true in your business as well. Now, let's talk about some of these strategies. What can you actually do? What's really the income taxes coming out? Now understand this, if you are a business owner and you're putting money into 401ks and IRAs, what are you thinking? What are you really thinking? First off, you might be thinking this, and I know because I've worked with thousands of business owners, but if you're thinking in your mind like, well, I'm probably my highest tax bracket right now because I make the most money, but when I retire, I plan on failing. I plan on living on as little as possible, so I'll be in a lower tax bracket, and then I'll pay my taxes. Think about it. If you have a 401k IRA, you're getting a tax deduction now, and that sounds great. Your accountant will even tell you that's a good thing because why? Your accountant doesn't want to get fired. He doesn't want you to get pissed off that you paid taxes. So your accountant, he or she will say, well, hey, you can contribute to an IRA, you contribute your 401k and waste money on fees there, and then of course, down the road, you just have to worry about taxes later. But right now, you get the tax deduction, and you're like, oh, I'm hired for another year. That's what the accountant's thinking, right? But for you, you don't want taxes down the road because here's the truth. Do you believe the taxes are going to go up or down in the future? What do you think? Now, some of you might be like going like, all right, let's go Trump. Let's see if we can keep taxes down. But Trump's not going to be there forever, right? He's going to be gone in a few years. What happens then? Unless you're going to die in the next couple of years, you're going to be wondering, are taxes going to all of a sudden go crazy on me? Why am I deferring my taxes today to do it later? Plus, I've got a business. I can write off so many things as a business owner. Even though I make good money, I can write off so much. And I have kids at home. I can write off the kids. I got mortgage interest I'm probably paying on my mortgage. I can write that off. You got all these deductions you have, and yet you keep delaying your money and putting it into IRAs and 401ks. Do not for 1 second buy that crap that somehow you're reducing your income taxes by putting money in those crappy places. Even if you're an employee, that still doesn't help you very much because then you have no write-offs. At least as a business owner, you might still have a side business or a partnership that you might be in to reduce your tax burden even in retirement. You get where I'm going with this? Those things are stupid, okay? They make no sense to me. That's why I didn't do them. That's why I cashed out my 401k in my 20s because I realized I'm like, what am I doing? I'm in my lowest tax bracket right now. Cash it out and see if I get things growing tax-free. This is where Roth IRAs could help you. That could be an option, but you can't usually put too much in. If you make too much money, you can't put money in anyways. I personally use life insurance because it grows tax-free, comes out tax-free, but I can use it while I'm alive. I can use it in my business and get tax write-offs there. I can actually write off the interest. I can use that money and also invest in different things to create passive income. And by the way, when you invest in real estate, not the stocks, which have zero tax benefit, but in real estate, you can pass on tax benefits with the depreciation and things like that, keeping more of your money. So if you're trying to figure out how to get your cash flow statement better, a great way to do it is 1, you have a business of some sort. 2, when you invest, don't put your money in crappy IRAs and 401ks. That doesn't do anything because you just pay taxes down the road. You're just kicking the can down the road to hoping that politicians will have your back. Let's be honest, that's BS, right? Instead, I want my money going and working in places like real estate where I can have more certainty, more control, better cash flow, and better tax advantages. That's where I put my money. Now, you can do whatever you want. I'm not giving you advice here, but if that's what you want to do to reduce it, like I've done as well, I've even had clients that literally, he made $1 million, and because he was an active real estate investor, he was able to write off all of his income and $50,000 of his wife's salary at work. He claimed $25,000 that year. He paid no income tax at all, even though he literally made $1 million that year because he had real estate as part of his portfolio. I'm telling you, that's where you can find real good value. Again, don't just do things to get the tax write-off. That's dangerous. Sometimes you'll be doing bad gambling investments if you do, but if you actually do the right things and you can get the tax breaks and you can get the passive income and cash flow too, how can you beat that? If you want to learn more how to do that, subscribe to our Money Ripples channel now, but also check out moneyripples.com where we can go deeper down those rabbit holes for you.